Welcome to our second episode of Insurance Investments and All About Town podcast. Our podcast is dedicated to ensuring listeners with knowledge they need to navigate home and auto insurance, healthcare insurance, make smart investment decisions, and stay informed about local happenings here in Blue Springs. We're going to provide insights and practical advice, helping you preserve your future while staying connected to your community. Tune in as we break down complex topics into actionable steps for a better, well-informed life.
That was good.
Well, thank you.
That was good.
Yeah, it only took us 6 takes. They didn't see that. So, I'm Eric Sporing, financial advisor, owner of ECS Capital Investments. My podcast partner in crime here, Tara Lavelle, with Von Fire Insurance. And our special guest today, David Mann with East Forty Brewery right here in Blue Springs. Thanks for being with us today.
Welcome, David.
Thanks for having me.
Yeah, no problem. Well, we made it.
We did.
You know, we made it. I told my wife last night, I said, love you. I'm probably going to wake up to the end of the world tomorrow. I actually woke up this morning and said, hey, are we the only surviving, humans left on Earth after the election? And so I'm glad that's over.
Okay,
So.
I have my post-election coffee, so I'm ready to go.
Ready to go. So, well, I don't know if you paid attention, but our first podcast, did you see how many people we had view it?
Last check was a whopping 49. Did we beat 49?
We did.
How'd we do?
We had 1,500.
Is that a joke?
It is a joke.
Oh, okay. I was like, wow, that's great.
Right? I wish we had that many.
Did we have 49?
We had like 50. I think we had 57. And
Okay,
so I think
all right.
that was, I was actually very happy that we had 57.
Right.
So that was good. So, well.
Well, my dad watched twice,
Oh, did he?
so that might be part of it.
Okay, well, I may have watched a few times too, so that probably, yeah. But I think so overall, I got good feedback. I don't know if you talked to anybody, but we got some good feedback about it, so.
I did. I told you my feedback, right?
Yeah, you're not looking at the camera in the
Yeah,
right place.
so my dad informed me that the podcast was great, but that I really struggled to find the camera. So I'm working hard at that today, Dad.
All right, well, we'll make sure we get you pointed in the right direction.
Right, thanks to David, I think we've got it figured out.
Yeah. We got a little arrow up here, Dad, showing her where the camera's at. So, yeah. No. Well, today I was going to talk a little bit about some auto insurance today. I'm a financial advisor, but I also have my property and casualty license as well. And I think today you're going to talk about enrollment for insurance, health insurance for businesses, what it looks like on both sides of that for the business owner and the employee as a whole as well. So be some great information. And then David will talk to us a little bit about East Forty Brewery and beer and some other things.
Sure.
So, all right. Why don't you get started? I mean, what's out there in the healthcare world? I know we talked about Medicare and things of that nature on our last episode, but today, talk a little bit about, healthcare and in the business world.
Sure. It's open enrollment season for just about everybody. So we did hit on Medicare last time. That's because it is the annual AEP. So that's the annual enrollment period for Medicare Advantage. So there's a lot going on in that world. Now, I think it started October 15th, ends December 7th. Also, the window for marketplace insurance just opened. So that's a November 1st open date, so people are making decisions there.
Okay.
But when it comes to employers and employees, January 1 is probably the most popular renewal date on group plans. So when you're looking at a group plan, there's always two sides of that equation, right? So there's the employer decision, like what are we going to offer? How are we going to contribute? But then there's also a decision on the employee's side. Sometimes maybe the employer is offering a dual plan option, or maybe there's more than two options. So the question becomes, how do you pick what's right for you?
Okay.
For the employer, we'll start there because that one's a little bit of a different equation. So for an employer selecting benefits, there are a few things you have to consider. One of those is carrier. So there's multiple carriers. All of those carriers have different pricing, different risk tolerance. When you go to market, meaning you're shopping everyone, when it comes to carrier, you want to keep in mind what the network looks like, right? Is this is the network large enough to support my workforce? So a challenge that's facing some employers right now are workers that are working from home. So you may be based here in Kansas City, and we have a lot of really strong regional networks. But if they aren't backed by a national network and you've got an employee sitting in Washington, it may be something you need to consider. So contribution strategy is another part of that equation. How much do you want to contribute to the employee premium?
Okay.
How much are you willing to take on in order to not pass those costs on to the employer? And I've seen everything from 50% contribution. I have a client who pays 100%
Wow.
of employee-only premium. That is quite a retention tool for that employer. I have some that just can't quite afford that, right? So they stick with the 50. The point is, whether you're a 2-person group or a 2,000-person group, there's a solution for everybody. So it's really just working with your broker. Gosh, if you don't have one, I know a girl, and finding what works for you. So some contribution modeling is really, really helpful. Also talking about, what's important. What are the factors that your employees are going to consider, which is going to be my bridge into talking about how an employee selects their plan for the upcoming year. When I look at plans for upcoming years, one thing that I consider is out-of-pocket risk.
Okay.
That is the max you're going to pay if you just have a terrible year, an accident, an illness that causes hospitalization. That's really the big number that you want to think about. When you're looking at a plan, that's listed as your maximum out-of-pocket. And that varies from your deductible. So a lot of people look at a plan and they say, I want a $500 deductible, which is fine. What that means is you're going to pay the first $500 of medical care. Once you hit deductible, you go into the co-insurance period, which can be anywhere from 50 to 90%, depending on the plan. And you'll pay that up to your max out of pocket. Once you've reached your max out of pocket, everything's covered at 100%.
Okay.
There are a lot of cost savings in taking a higher deductible rather than the low deductible. Same with car insurance. You find the same thing, car insurance, homeowners insurance. The more risk you're willing to take on as a consumer, the lower your rates become. So in thinking about that decision, you need to think about what you can really handle out of pocket should the worst happen. And that's definitely a personal decision. Everybody has a different amount sitting in their savings account. I find a lot of high earners that are really choosing high deductible plans because they can save on the monthly premium. They aren't high utilizers of the plan, right? Save on the monthly premium, but still have a reserve in the event that there is an emergency or they do need to use a hospital benefit or emergency benefit, something of that sort. If you have an HSA offering, that's another thing to consider. So a lot of companies will do a base plan, which maybe that's an HSA, which is a high deductible plan, right? A qualified high deductible plan, meaning you can invest in an HSA, a health savings account, to help cover all of those costs up to deductible. The advantage of doing something like that, if you're not a high utilizer of a plan, is that money never goes away and you're earning interest, right? And there are some tax benefits to that. I am not a tax specialist, but I'm sure somebody can tell you how you can spend that at 59 and a half. But it carries over year over year over year. There are some companies who seed an HSA, meaning if you sign up for the HSA product, which is less expensive for the employer, less expensive for you, sometimes they're throwing money in there for you. That's free money to you. So that's something to consider too. And another thing to consider is, am I a high utilizer? So if you have a condition, you go to the doctor quarterly, whatever it may be, or you have a med check that you need to do monthly, then maybe the lower deductible makes a lot more sense, right? Because you're going to save on some of those upfront out-of-pocket costs and get to your deductible a little bit faster than most people. So I think the things that you need to consider with open enrollment is, how am I utilizing the plan? How does my family utilize the plan? And does it make sense to enroll in the low deductible, or is the high deductible an option for you with maybe an HSA? You can actually open one on your own, probably at your local financial institution, if maybe your company doesn't sponsor one. But I think that's a tough decision for everybody. I do a lot of counseling. I believe every this time of year, my friends start calling me right and left because they're in open enrollment and we're trying to run the numbers and see what's best for them. So just something to consider. Maybe that low deductible plan isn't always the right option for you. So just kind of thinking through how your money is spent and where it might be, how it might be best spent.
So, you brought up a couple of them. Actually, I wrote one down. You probably saw cheating over here. You saw me writing some down. But I know you don't have your glasses, so you couldn't see that small writing. So, but you mentioned HSA, and that was something I wrote down. It's not something it sounds like you have access to. You said to open it up out on your own. But HSAs, I think, are a great vehicle to put money into. I always ask all my clients on the investment side, do you have an HSA? Because it's a great way to help reduce costs, on medical bills. But, and I use this with a lot of my clients. We talk about Fidelity Investments every year does a study on what it costs for a healthy 65-year-old individual couple in retirement. It's like $313,000 is what you'll spend in retirement just in medical expenses alone. So I really, HSAs, I really, recommend that. Like I said, I don't do them, but, doesn't sound like you do them, but definitely I like how you hit on that. A question I had, though, and you brought it up a little bit, is so you can sit down with that employee, because when you were talking, one thing it came to my mind was, I don't go to the doctor a lot. So do I need that high deductible? Do I need that low deductible? I mean, what fits best for me, Or I have 2 kids, and, kids, they go to the hospital, they go to doctors. And so you can sit down and help people with that?
I can, yeah. We do that all the time. And some of that, I do a lot of that, especially in the Medicare space. So people who haven't retired but are Medicare eligible are really trying to decide, do I stay on my group plan or do I move to Medicare?
Okay.
And so we can quickly kind of run a cost scenario and really a benefit scenario, because the benefits are going to be very different, and quickly show you on paper what each of those decisions looks like for you. And same with, like I said, my friends call me all the time. Tara, am I doing HSA this year, or should I go? And here's the kicker. So I have a friend that asks me every year. Last year, she knew she needed a procedure.
Okay.
So knowing she needed a procedure, the right option for her that year was to take that low deductible, right? When we added it all up and we figured out what the cost savings would be, it made sense to do that. It doesn't always, but in a heavy utilization year, if you know you're going to have a heavy utilization year, it's probably a good year to take a low deductible. If you're one of the lucky, healthy Americans that sees their doctor once a year because they have to, right? High deductible might be great for you. And to speak to the HSA, so on a group platform, yes, I can set up an HSA for a group.
Oh, okay.
Right? So if I have an employer who wants to offer a high deductible plan and an HSA, that can all be set up together.
Okay.
An employer can offer a high deductible HSA eligible plan, but does not have to offer the HSA or seed the HSA. And in those situations, you as an individual could go to your local financial institution and get an HSA set up. Yeah. And those in an HSA, your Part B Medicare premiums can actually be paid through your HSA also.
Okay, that's good to know. I did not know that. That's good news.
Can I ask a question? So as an employer, we do that first step where we have to select the plans that we're going to offer to our employees. And a lot of times there's a lot of choices to choose from.
So many.
So, and being a small group, sometimes we'll go to our employees and ask what options they want, before we do that. But what advice do you have for selecting the options, as an employer?
When I work with an employer, I usually pare all that down for them. So if you've been an employer and you've searched and someone's come to you with the 50 available United Healthcare plans, right? I usually pare those down. What I kind of find is standard in the market is somewhere around a $1,500 deductible. Makes people feel pretty darn comfortable. Can be affordable. So I usually kind of show two things, right? Sometimes I'll show three. So I'm going to show a lower deductible, a mid-range deductible, and then that high deductible HSA qualified plan. Those are kind of my three go-tos. And then the rest of it is, to me, seems a little bit like minutia, right? We're arguing over $500 here. And you'll also find the price break between those, between a $1,500 deductible plan and a $2,000 deductible plan, is so minimal. It's probably not even worth showing that $2,000 plan. So, I would say think of, and you're right. I mean, when you have an employee group, for you, one good thing is you guys you're small employer. So you aren't asking the opinion of 50 people.
Right.
And it is important to you, right? You really need to appease the masses in your small little pool so that you can continue to offer benefits that they find valuable. So in your situation, that's probably where I would look, is around that, $1,500 range. And depending on how many you have on plan, you may be able to do a dual option where some people can choose that, hey, I never go to the doctor. I don't want that money coming out of my check. I want that high deductible plan in case something happens. Whereas you may have another employee who has a dependent. Who knows? Like my kid has 4 ear infections a year. Like we need to have access to co-pays at least. So
yeah, definitely the same plan's not
right.
for
Yeah, it isn't. It isn't right for everyone. And I think that's the struggle as the employer, is what you're really trying to do is attract and retain talent through benefits, especially for small employers. That's how you lose people sometimes, is right? Can't afford benefits. Well, they'll find somebody who can give them health care. The other thing I found is sometimes it's in the communication of the product. So if the product, regardless of the benefit, is communicated properly and everyone's educated properly, which is the job of your broker, they'll be happy regardless what they have. Where you find the most frustration is when people don't understand how to use their benefits.
Quick question. You mentioned something caught my ear a little bit. You talked about healthcare plans for 2 to a 2,000 or something. You used that. And that's what I run into, I think, a lot of times is I'm just a one-man shop here. So I don't have access to group plans. And so I wanted to make sure that, people out there were, hearing you on that. That's something I fall into, is just not being able. I have to go out and get it on my own or go through my wife's, employer.
That 2 is the magic number. So you can't have a group if you don't have more than 2 people.
Right.
And then sometimes you run into some additional eligibility issues. So, there's a carrier that says, if you have 3 employees, all 3 have to be on the plan. So 2 are on and 1 is off, they aren't eligible.
Right. And on a 2-person plan like that, do they both have to be on there, or just one has to be on there, but you have to have 2 people,
In most cases, we need 2 people
you have to have
on
2
the plan.
people on the plan. Okay.
Yep.
Okay. Yeah. Okay. All right. Good information.
I feel like I took up a lot of time. That
Well,
felt
I
really
wasn't.
long.
I wasn't looking at the time or anything. Just seeing you eating up my time. But
Perfect.
So right, I don't get to talk that long today. Well, I guess you guys may have tag teamed on that before you got here.
We were like, how do
right.
we keep Eric quiet?
So, well, thanks for that. That's actually good information. I know the HSAs, like I said, is great. I'm a big proponent of HSAs, so I'm glad you brought that up. I always talk to my clients about that. So now I know where I can maybe send them. So I was going to talk a little bit today about property and casualty insurance. I know you guys have both probably seen it. Premiums have been going up through the roof. I know maybe business-wise, even personal-wise, you've seen them. So I'm going to touch base a little bit on that today and why, are we seeing, these rates go up, and so, we've seen some natural disasters, right, happen here. It's hurricane season. So we'll start there, right? If we're going to talk about, natural disasters. Let's talk about hurricanes. And when we think about hurricanes, right, Florida is probably, the one we always hear about, right?
Yep.
And so, Tara, I like to bring
Oh, here we go.
Here we go. I'd like to bring some homework, but so can you tell me just, and I'll even give
He's
you.
going to ask us, we're going to have to
You're right.
answer quiz
I'll even
questions.
give you a 10% variance. That's pretty good.
Okay.
So can you tell me what percentage of the hurricanes that hit the U.S. actually hit Florida? And you notice I folded this up.
Oh, the percentage.
Yeah, it's a percentage. So just percentage. I'm giving you a 10% variance.
I'm
So
going 60%.
60%.
Oh, I was going to go with like 80%.
Really?
Yeah, I felt like it was really high. That's all I ever hear about.
Okay.
I mean, but I guess I forgot. There's Louisiana, there's the
You
Carolinas.
got Texas, you got the
Oh,
East
totally
Coast.
forgot about Texas.
Right.
It's such a small state, so easy to forget about.
Texas, small state. 80% of it? Or 60?
He said 60.
You
yeah.
said 80.
I said 80.
Yeah. 41%.
Oh gosh, really? That's
Yeah,
it?
that's it. 41% of hurricanes that hit the U.S. hit Florida. So, but so that's why the reason I picked the hurricane because it's kind of fresh in the news, right? We've seen some hurricanes down in Florida, but how does that hurricane hitting Florida affect all of us, not just us sitting here, all of our listeners out there, all 57 of you. I'm sorry, 55 because your dad watched it twice. So, so 56.
Does this have to do with the pooling of premiums?
There you go. See, you're going to kind of know this, right? So, yeah. So how does that affect, a hurricane affect, somebody living here in Missouri or Kansas or, Nebraska? How does that affect you? So here's what's interesting, and you just kind of hit it on it. Insurance is about spreading risk, right? And that's the pooling you're talking about. And major insurers usually operate in, like I just said, multiple states, just like healthcare insurance, right? So let's say, the big, hurricane that just hit Florida, they a lot of losses. So they're going to spread those losses out, elsewhere, right, to make up for that. So, that could mean raising premiums, right, across the board from multiple states, to keep their balance sheet, healthy. And so, like I said, they're spreading that risk out among, these other states that may have not been affected. Now, I'm not saying that's fair, but it's just how the system works. We all shoulder that expense, from that disaster. I'll even break that down a little bit more. Let's say that you're in a state that doesn't have a lot of natural disasters, like Ohio or Wisconsin, for instance. I'm in Ohio, maybe a tornado here and there, but Wisconsin, doesn't have a lot of natural disasters. You might think that they're immune to those rising premiums. But in reality, insurance companies pool their resources, among multiple markets, multiple states, so they're pooling it out there. So a loss in one state, could affect multiple states, across the board. All companies want to stay profitable, and so that's how they stay profitable. When these losses pile up, they pool it and spread it out across other states. But something I wanted to talk about, a lot of people never talk about this, and you may know what I'm talking about when I talk about this, but you never hear when you're reading about premiums going up and this and that. It's called reinsurance insurance. And so when you hear about Florida, for instance, just got hit with these big hurricanes, and you're hearing about billions and billions of dollars of losses, well, these insurance companies they are paying out billions of dollars, but they're not reaching into the bank and pulling out $2 billion. They go out onto what's called the secondary market. It's called a reinsurance. So they're going out and they're getting insurance on their insurance. And so that's kind of when they have these big losses. That's where a lot of the money's coming from, is from the reinsurance companies. And so that's what affects that affects your premium more than just the insurance company being, in Florida. Because when it comes back around next year I'll use State Farm, for instance. I'm not picking on them, but I'll just use them because, they're one of them that's talking about reducing their exposure or pulling out of Florida forever. Because of just the losses there. But when it comes time for them to renew their reinsurance insurance next year, guess what happens? Well, their premiums are going up even with the reinsurance company. So what's going to happen is that, once again, the insurance companies are going to pass that onto us. Everybody out here is taking on that hit. So that's why you see a lot of premiums going upward is because the reinsurance companies are taking the hit. I actually have a client that's in the reinsurance business. He's on the crop side, and one day I had a 30, 45-minute conversation with him just about this, about them, going out, insuring companies and then have to renegotiate. And it was an interesting conversation I had with him. But, that's, those premiums are getting passed on to, to the insurance companies. I know that
also happens in health insurance. So we also use, reinsurance when it comes to like stop loss in a, in a self-insured policy. So the same thing. Insurance really is insurance is insurance. Like, it's all kind of, I tell people all the time that insurance is like the casino. Like, the house is always going to win.
Right.
So as those costs, whether it's reinsurance, whatever it is, as those increase for the carrier, they're going to pass that along. They're going to find a way to pass that along.
Right. So, but I thought that was interesting.
It is a for-profit business.
Right. Well, that's why I said their balance sheet.
It is a for-profit
business. So, but I thought I would bring that up because you probably don't ever really hear about the reinsurance, and nor should you. But that's why you're seeing some premium increases is because these reinsurance companies are taking a hit. Now, the insurance companies are taking a hit as well, so I wanted to just kind of put that out there. But some tips, some practical tips you can do to help alleviate some of those escalating premiums is shop around for rates. There are still some companies out there that have good rates, property casualty rates, business. I'm actually seeing more and more business home or business owners, coming to me because of, increasing rates as well. So you're starting, but you're still able to find some good rates out there right now. And, I'm a broker, so I don't deal with just, one company. I have, multiple companies to work with. The second thing is, understand your policy. What are you paying for? And what are you not paying for?
Right.
There may be things on your policy that you don't need, but can cost you be costing you money. And so it's good to know what you have and what you don't have. I meant
I would say you definitely run the risk of assuming you have a coverage that you don't.
Right.
So it is important to know what you have and what you don't.
A prime example, probably the biggest one we always see is a sewer backup.
I was just going to say sewer backup or a sump pump quits. Yeah,
exactly, and you're not covered. Because you didn't have that coverage. So exactly, and think about this too. I mean, some insurance companies give discounts for little things as shutters on your home, to alarm systems, things like that. You get a discount. Also, multiple discounts if you have multiple policies. You can get discounts. So, but just some things to think about when it comes to insurance. Just shop around, know what you have, and think about discounts. And so I'll leave you with this because once again, I like to bring statistics and facts. And so, with hurricanes, the premiums. So we've seen some premiums increase by about 10 to 30% of areas affected outside of the hurricanes.
Okay.
So you're like, well, here we are in Missouri, right? I actually did see a statistic here not too long ago that I think Missouri has seen like a 20 to 30% hike over the last year or two.
I know, I have.
Right. And so, but I wanted to share that so, people out there just now they understand that, 10 to 30% is just due from a hurricane. And that was last year. That is, these numbers haven't even been totaled yet. So, but just wanted to share a little bit about, property and casualty insurance and, how you can maybe save a little money and why your premiums are going up. So
that was my former life. So I was in property and casualty for a long time.
That's right.
And I always found that people that loved their insurance were the ones that had to use it, right? And that's the truth.
That's true.
You don't realize the value of it until something happens and you have to use it. And then, you're certainly grateful that you have it.
Yeah. So good. Well, I've rambled on. We've got enough insurance for one day, right? I think.
I think so. I think I took 19 minutes and you took 11, so I need to work on that next time.
Yeah. So, we'll come over here to David. David, like I said, is part owner of East 40 Brewery here in Blue Springs, Missouri on Main Street. Great establishment. I know he has a great following. David, welcome to our podcast.
Yeah, thanks for having me.
Thanks for coming in bright and early at 6 o'clock in the morning. Now, we don't actually shoot at 6 o'clock in the morning. Tara's lucky to make it here at 8. So.
05.
But David, tell us a little bit about East 40 Brewery. One thing. What led you to open a brewery?
Yeah, so I guess my story is similar to a lot of breweries, a lot of small businesses. It started as a hobby. Something I was doing, brewing beer in my garage, and one thing led to another. So yeah, that was 13, 14 years ago that I started brewing. Quickly moving from brewing with extracts to brewing with grain, from bottling to kegging beer. And within the first couple of years, we were going to beer festivals and serving it to people.
Okay.
I love a good beer festival.
Yeah, people love it. But the brewers love it too, because you can get a lot of good feedback there.
Yeah.
And so that's where, started to hear, because your friends, your family will always tell you, oh, this is great.
Great. Yeah, I love it. Yeah.
But, go out and have, a couple hundred other people try it. You can, start to get some more honest feedback, and, found out that it was pretty good. And, so that kind of planted the seed for, a dream of maybe, selling it one day.
Yeah.
And several years later, we started planning and, started getting to work on it.
Nice. Well, I know, like I said, I know you have a great following, at East 40. So you must be doing a great job because, got a great following.
Why don't we try?
I am definitely a follower.
Right.
I am a follower.
Yeah.
What made you choose downtown Blue Springs? Of all the places you could have chosen, why'd you choose downtown Blue Springs?
Yeah, so me and my wife lived in Blue Springs. We still live in Blue Springs. So, we wanted to be close to home.
Okay.
It's something that I was going to go to every day. And Blue Springs didn't have any breweries.
That's
so
right.
we were trying to bring something to this community that it didn't have, kind of serve that underserved.
Yeah.
Yeah.
And what a great location.
Yeah.
It really is a great location.
Yeah.
So, and specifically why downtown, that just kind of happened by chance. There's only so much real estate out there available at any time. And, so we were looking in and around Blue Springs, looked at some locations in Independence, but really wanted to be in Blue Springs, wanted to be close to home. And when I found the building on Main Street, started imagining, what it could be, and really happy that we landed down there and we're part of downtown kind of revitalizing and growing, and want to be there, be part of that growth. And,
It is such a great spot. And I know that, the patios on beautiful days, the patio is always full. I know that you have a lot going on inside too. I think we'll get to that here in a few minutes, but it really is like the location's perfect.
Yeah.
And it draws people downtown, which I think is nice. I think we have a wonderful downtown area. I certainly hope that it keeps growing and we keep getting, new places to hang out and shop and all of that fun stuff. But you guys have been a great addition down there.
Yeah, I agree.
So David, what was your biggest challenge in opening the brewery?
Finding money.
Shocking.
Yeah. So, a lot of banks will view restaurants, or, you might have heard, restaurants have a high failure rate.
Right.
And so they view brewery just the same as a restaurant, kind of group us together, because we sell drinks, we sell food too. So, they're looking at that, not wanting to take the risk on that. So a lot of banks would just pass. And it took talking to a lot of banks before we could find one that was willing to loan us the money. It was through a SBA, small business backed loan. That's the only way that they would touch it still.
Right, yeah.
But we were able to get that done, and that opened the door to start moving forward.
Great.
Nice.
Let's talk about community impact. So I know that you, on many levels, contribute to the community, but talk a little bit about that.
Yeah, community's super important to us. You know, kind of view the brewery as a community gathering space, you know, somewhere where people can, you know, come together, meet their friends, meet new friends, you know, so supporting the community is an important aspect, and we try to do what we can, you know, in that regard. We're, you know, big members of the chamber and,
Yep.
you know, big supporters of the chamber. But yeah, we do fundraisers throughout
Yes.
the year. Try to give back to, you know, a lot of causes. We can't do everything.
Right.
You know, I'm sure, you
Yeah,
know, as a
right.
business owner, you get, you know, hit up for donations
Yeah.
for stuff all the time. So, I mean, we have to be selective, but, you know, we try to do what we can.
Yeah.
So last month in October, it was National Disability and Employment Month, and
Yeah.
so we partnered with Job One, and we were able to
great
raise
organization.
That is a fantastic
Yeah.
organization.
raise some money for them. So that's kind of stuff we, you know, like to do, and you know, we'll pick a month and a charity and do what
That's
we can
great.
for
Oh,
them.
that's awesome.
Yeah, I think that's so important for business
Yep.
owners to
Yep.
be not only a part of their community, but giving back to their community. So
Yeah.
thank you for that.
Yeah.
Of course.
What are you most proud of?
Yeah, just, you know, sometimes just taking a step back and looking at what we've built, and you know that we're actually doing it. You know, we
Right.
have
Yeah.
this
Yeah.
real business that's
Yeah.
operating. We're, you know, providing a fun place for our
Right.
community for people to go, and you know, providing jobs. You know, a lot of part-time jobs, but even some careers. You know,
Yeah.
for some of our employees that just wouldn't have existed otherwise. So it's
Otherwise,
like,
yeah.
you know, sometimes I think about that, and you know, proud of the fact that we were able to build something from nothing and, you know, get to where we are today.
Yeah, kind of like Microsoft, you know. It all started
All
in
started in
your
your
garage. It all
garage.
started in your garage, you know. So.
Not quite the same scale, but
Well,
That's
no,
okay.
but it started in the same place. So, right, yeah.
Well, I know, and you know, Eric might not know this, but Kansas City has quite a beer scene. So we have a lot of selections when it comes to choosing a brewery or a craft brewery. So what is it that you think makes East 40 unique?
Yeah, you're right. There's a lot of great beer in Kansas
There
City.
is, yeah.
You know, it's grown. You know, we were kind of in that second wave of, you know, brewery openings, and gosh, there's, I don't know, you might know, but probably 60 or more breweries now in the Kansas City
Is
area.
it really? Wow.
There's a lot. And yeah, a lot of breweries making a lot of good beer. It's hard to differentiate. You know, some do, some focus on specific styles. They might focus on IPAs or sours, and that's their thing. You know, we try to offer something for everybody. So we brew styles across the board. You know, we do them well, but again, that doesn't set you apart because there's a lot of great beer. But also, I don't think that necessarily other breweries are competitors. I mean, we don't do a lot of distribution, so we're not out in the market, you know, competing for shelf space, tap space. You know, we're where we are, and people come to us. I mean, we're providing that for our community, and you know, the location, you know, kind of sets us apart because, you know, we're the place for Blue Springs, you know, people close by to come.
Right.
Obviously, we'd like to get people from across the metro, and we do, but like, you know, people are going to gravitate towards their local brewery.
Right.
Well, and I think one of the differences is the typical brewery setup is we serve beer,
Right.
right? Not everybody drinks beer. So I have a best friend, she's not a beer girl, and that's okay. But I can go somewhere like East 40, and he's got cocktails on tap. So there's a small cocktail menu.
I guess to
so.
expand on offering something for
Yeah.
everybody, that's not just beer styles, but you know, we do cocktails, we do wine, we try to have an expansive non-alcoholic selection, and food. And so, I mean, really, hopefully, you know, if you bring your friends, you bring your family, everybody can find something.
There is
that they
something
like.
for everyone,
And,
for
and
sure.
I'll jump on that. I meant, you know, I've been to East 40. I'm not a big, as you were talking about IPA sours. I mean, I'm not, you know, a big brewery, you know, guy, but I'm be honest, I'm a Bud Light guy, you know. And I remember walking into your brewery, and I said, he's like, you know, bartender's like, what do you want? And I'm like, I don't know. I said, I'm a Bud Light guy. And he goes, this is what you would like. He goes, this is similar to, you know, what a Bud Light is, and it was good, you know. And
He
so
got a Giacomo, didn't he?
Yeah.
probably it was light. It was a light, you know, colored, and it wasn't dark, you know. But to your point of, look, I'm not a big, but I can walk in to your brewery, and you've got something that, you know, I liked, you know, and, you know, I can sit there and drink, you know, a beer.
And having great staff and, you know,
do have
people
great
that
staff.
can, you know, tell you what you might like,
Right.
you know, is an important part too.
Right,
You know, we
exactly.
try to make sure that everybody knows our beers, knows, you know, about beer in general, and how, you know, when somebody says they drink this, you know, where to go,
Where
and
to
what
fill-
else they might
right.
like, you
What
know,
lane
that we make.
Yeah, what lane it's in. And I'm a little, are you on staff there? I mean, you knew right what beer I had. You had a Giacomo. So.
No, I'm just a seasoned or veteran
I
patron.
would say veteran, not so.
I've spent a few days
yeah.
at East Forty Brewing for sure.
Yeah.
We'd love to have you.
I know you do. Everybody's always so kind. Let's talk a little bit about events. I know that you do a lot of events, so I want you to talk about those. And then I want you to talk about the Mill Room, because I think that's a really unique offering too.
Sure. So we host a lot of our own events.
Yep.
You know, every year we have things throughout, you know, seasonally. We've got the St. Patrick's Day and Oktoberfest and Halloween, and, you know, do all the holidays. We also host several vendor events throughout the year. Some of them, you know, kind of paired with a beer release or something. So in April, around Earth Day, we always release the beer called Calm Me Maybe. It's a honey and lavender IPA. And so with the honey and lavender, we do a bee, an event, you know, around bees and, you know, earth-friendly products, have vendors in there. You know, so we try to do those kind of themed events. We host live music every weekend, Fridays and Saturdays. We've got a comedy night we've got trivia on Thursdays that's very popular. And about once a quarter, we host a comedy night in the Mill Room. And so that's one of the events that we host back there, but the Mill Room is primarily, you know, for private rentals. So people rent that for everything from birthday parties, graduations, to weddings, you know, whatever event you've got. We can, you know, up to a certain size, we can accommodate that. And that space we didn't have initially, started building that in 2020, you know, during COVID and, you know, trying to keep people busy. So, you know, now's the time to turn this storage area into a, you know, useful space. We kept a couple guys, you know, working by building that out, and figured by the time we were done, hopefully things would be, you know, you could have gatherings again.
Yeah, open it back up.
So yeah, that worked out, and yeah, we host a lot of events back there.
I say it seems to be, I mean, a really popular spot. I usually see that there's an event going on there over the weekend, or, you know, maybe during the week. Everything from, like you said, I've seen class reunions, I've seen weddings. How's the holiday season? Is it filling up? Are people utilizing it for holiday parties this year?
Yeah, absolutely. So yeah, we have a holiday package, so people can come in, they can cater it, you know, have their company parties there, they can cater in food, we'll provide the bar, and you know, we've got some extras in there for the holiday. We decorate it, and
Fun.
so yeah, that's a good use of the space for December, and, you know, going into kind of a slower time of the year.
Yeah. And I've noticed too, a lot of holiday parties anymore, like they start in November and they go through January, right?
yeah,
So like there are a lot of, that's probably, I mean, January is probably a slow month for just about everybody. So it may be a, you know, probably a good way to stay busy. But I have certainly participated in trivia and lost many a times. I don't know.
But you still had fun.
I do. I have mine every single time. I've been trying really hard to get our name on the wall for years, and it just hasn't happened yet. But maybe one of these years, Brews and Q will come through and be a seasonal winner. The live music is great. I've found a couple of either solo artists or bands that I've enjoyed that you've actually, your location has introduced me to, and then I can kind of follow them all over the city. So I'm clearly a big fan, not that I'm biased, but I am, of East 40. I think you guys are doing a great job. All right, here's my hot seat question. I know he has one for you. You are in your post-apocalyptic bunker, and you could only take one style of beer with you, and it's all you've got. What is it?
That's a tough one. Yeah, given the circumstances,
Okay.
I think I'd have to stray away from the IPAs, anything too high in alcohol. So I'd probably go with a lager, something easy drinking, something you can have several of.
I really thought about this one before I asked you, because I am an IPA girl. Love them, all of them, don't care. But I came to the same conclusion. I'm like, I think that you need something that like is an easy drinker that you're not really going to get tired of, right? So I think I would go with lager. You'd go with what? Diet Pepsi? What is it you drink once a week?
I would go Giacomo.
Oh, you and your Giacomo lager. Okay.
Giacomo.
All right.
So I just learned it today.
Bunker, then. We might be in the
There
same
we go.
bunker.
We can all just share a bunker.
So we'll just use, hey, Apocalypse, we're in that bunker, and because we just went through Halloween, right? And so my hot take question today was going to be, what's your go-to candy bar? What are you going to put in that bunker with you?
Easy. Reese's.
Reese's peanut butter
yes.
cups. Yeah.
That's a good. It would be a toss-up for me between Reese's and Snickers. They're the only two candy bars that I enjoy eating, but I don't know. Now, if it was like Reese's trees or pumpkins, I would 100% pick Reese's because the peanut butter to chocolate ratio is better. But if it's just like a straight Reese's peanut butter cup or a Snickers, it might be a toss-up.
Be a toss-up.
If I'm gonna specify, then I'm gonna do dark chocolate.
Dark
Oh,
chocolate.
I haven't had one.
I haven't had one either.
Okay, I'll have to try that.
Put that on the list to try.
Wait, what's yours?
I'm a Kit Kat.
A Kit Kat.
I got a Kit Kat.
That's
I'm
good
gonna take my Kit Kat with me.
That's a really boring choice. No, I'm just kidding.
But if I'm traveling, like my wife and I, our kids play sports at college, and so we travel a lot. My go-to when we stop at like a rest area, Payday.
That's really?
Yeah.
That was my stepdad's absolute favorite.
I'm sorry.
Was Payday.
No, I'm sorry. I said Payday. Whatchamacallit.
I don't even know what that is.
You don't know what a whatchamacallit is? Oh.
I was just talking about those the other day.
Yes.
Actually, remembering. I didn't know they still sold them.
Yep,
I don't
crispy.
Go to the candy aisle a lot.
Yeah. I mean, not every place has them.
Yeah.
There was one stop we'd always stop at on our way back, and they always had the Kit Kat, or Kit Kat, the whatchamacallit. You got to try it. It's crispy, kind of like
You lost me there.
caramel,
I don't like that.
chocolate.
Like Rice Krispie stuff? I don't like that.
But anyway, yeah. So we'll wrap it up today. David, great information. East 40 Brewery, it's a great, like you said, great add to downtown Blue Springs. I hear nothing but good things about it. Thanks for joining us today.
Yeah, thank you guys. I learned a lot too.
Yeah.
Good.
Tell us a little bit about East 40 Brewery. Tara, anything to add before we exit stage left here today?
No, I think that's it. I was
All right.
really grateful that you agreed to come on and talk us through one of my favorite subjects, which is beer. So it's way more exciting than insurance
Right,
stuff.
exactly. So.
And we'll see what we have for next time.
All right. How can somebody get a hold of you? Like if they want to talk to you about some health care for their business?
Sure. You can always find me on LinkedIn. Best way, I'm just going to say, is cell phone, right? 816-462-8526.
All right. Awesome. David, if somebody wants to give you a call about the Mill Room hosting an event there.
Stop in at East
Yeah,
40.
sure. Stop in, go to our website, east40brewing.com. They can call the brewery, 816-988-8217.
All right. And I can be reached at 816-510. I forgot my number there for a
Look at
second.
me.
I forgot my number. 816-510-9067. Once again, thank you, David, for coming on.
Yep.
Tara Lavelle, Von Fire Insurance. I'm Eric Sporing, ECS Capital Investments. See you on our next episode. Thank you.